Hi all, today in this video I am going to explain an intraday strategy which works tremendously if applied under proper setup. This is a very simple strategy which uses a simple indicator, only one indicator, that is exponential moving average. As I always say, using a lot of indicators will not give you good results. Using the indicators in the right way will give you good results. It may be using a single indicator or two or more indicators. Usually it's better to minimize on the number of indicators that you use, but effectively use even though it is a single indicator. So this strategy is based upon one single indicator, that is exponential moving average. We will be applying the same indicator 3 times. That is, for the strategy we are using 13 days moving average, exponential moving average, 50 days exponential moving average, and 200 days exponential moving average. So just by applying this strategy, we will find our entry point, stop loss, and our target. For this particular strategy, you have to keep the time frame at 15 minutes, and you can keep RR at 1:2, or you can trail the stop loss, or you can keep the 200 days moving average, exponential moving average, as your target. So depending upon the situation and setup, you have to fix the targets. A very simple yet effective strategy, but make sure that you go through the video, complete video, and you understand the entire process, because only if you enter in the proper setup, this will give you good results. So let's quickly get in and check it out. This is TradingView portal. You can use this portal. You can open an account in this portal free of cost. First, you have to apply the indicator. As I already told, exponential moving average indicator you have to apply. That is available over here. If you click here and put exponential, you'll get exponential moving average, and once you click this, you have to select it 3 times, because we need the same indicator 3 times over here. So once it is selected, go to the settings, and here inputs, by default it will be 9, so change it to 13 for the first indicator. For the second indicator, go to setting and change it to 50. It will be 9 by default in all the cases. And for third indicator, go and change it to 200. Then click OK. First, let's understand the logic behind this strategy. Whenever these two lines, that is 13 days moving average and 50 days exponential moving average, intersect, that will be the point where we will get a very good trade. But if we take the trade at these points, if we wait until these two intersect, we will lose some good opportunities. That's why what we do is, we have to check when these two lines, that is 13 days exponential moving average and 50 days exponential moving average, starts coming closer. At this point, you have to check if any candle is breaking both of these lines. That is, the lines should be nearer, coming nearer, and one single candle has to break both of these lines. There you have to check for the entry, stop loss, and RR. Then you might be wondering, what is the use of this 200 days exponential moving average? When you use this is, in case you are looking for buying opportunity, if this 200 days exponential moving average is above, then you can keep it as a target. Similarly, when you are looking for selling opportunity, if you get a proper entry, and if this 200 days exponential moving average is below over here, then you can keep that as a target. Now, if you don't find the exponential moving average below in case of selling opportunity, you have to keep your target based on RR. Similarly, if you are looking for buying opportunity and this 200 days exponential moving average line is not above, then you can keep your target based on RR. So this is all the concept behind this strategy. It's a very simple one. Now let's see how it works. If you take this particular case, you can see that the intersection happened here, right? Here. But if you wait until this intersection happen and take the trade, then you will have to take the trade at this candle. This is a confirmation candle, right? So you will be entering here for selling. You will be shorting here. So you will have to, lose a lot of points over here. That's why what we do is, we just see when the candle comes, when we just check when these two lines comes closer, and at that point, if you find a candle which breaks both of these lines together, that candle will be the confirmation candle. There itself you will place the order. So in this case, this candle, this red candle broke both of these lines. So below this candle you will place the order to short. Where will be your stop loss? Stop loss will be just above this candle, that is keeping a buffer of 0.20%. Now in this case, if you check, exponential moving average, 200 days exponential moving average is above, but you are looking for shorting opportunity. So you cannot keep this as a target. Instead, you can keep the target based on your RR, or you can go for trailing of stop loss. But in this case, you can see the entry is not triggered in the next candle, right? So you have to cancel this order because in the immediate next candle entry is not triggered. This candle you got another opportunity, so below this candle you will place the order and that is triggered, right, immediately in the next candle. So this will be your entry, this will be your stop loss, target will be based on RR ratio. Now let's check out how this works under real time scenario. Okay, so if we go on looking like this, the candles are forming 15 minutes candle. Let's see, till now no candle has broken both of these lines. So if we go on just checking further, now the next candle is formed, right, green candle, but you can see here it has touched both of these lines, but this candle didn't close breaking both of this, right? Only the wick has crossed this line, but it didn't break both of this, right? The body of this candle didn't break both of these lines, so you cannot consider this candle, so it is not a complete confirmation. Let's move further. We didn't get the entry here, we didn't get the entry here, right? Even this candle didn't properly close both of them, so let's wait. Now this red candle crossed both of these, right? The body of this candle broke both of these lines. So if we get a proper entry, now we can place the order over here. Okay, entry order, this will be the stop loss, and in this case 200 days exponential moving average is above, so we'll place a target based on our RR ratio. So now let's see what will be the next candle formed. Now if the next candle is red, then we will wait, we will not cancel this order. Even though our entry is not triggered, still we will wait if it is a red candle. But if a green candle is formed, then we will cancel this order because this setup may not work for us. Let's see what is the next candle coming in. It is a green candle, so it again, the chances are there that the stock will start moving in the upward direction, so you will cancel this order. Now you can observe the another thing over here, that the next green candle that is formed, this candle again broke both of these lines, right? It broke 13 days exponential moving average as well as 50 days exponential moving average. So this is again our second opportunity. So what we can do is, you have to place an order for buy over here, keeping a buffer of 0.20, and your stop loss will be below this candle. And in this case, if you see, 200 days moving average is above, right, above these two exponential moving averages. So this can be your target. Now again, target can be this one, or you can, if you want to go by your RR ratio itself, you can go, or else you can also go by trailing the stop loss candle wise. Now let's see how did the next candle form. Yes, you can see that the stock started moving upwards. So your entry will be triggered in this candle, and if you keep this as a target, then the target will be hit in another 30 minutes. Now if you go on trailing the stop loss, then you can just write the whole trend over here. So if you trail the stop loss, you will exit somewhere at this level. If you are a beginner, if you see somewhere, if you learn about this indicator, what you will do, you will place this indicator and you will wait for this intersection, and you will take the trade when the stock closes above this. Now if you wait for this intersection and take the trade, your entry will be somewhere here, so you will lose all the opportunity. Instead, immediately after that, you can see the stock started coming down. Actually, this is how you end up making losses. So that's a reason why I have modified this strategy and gave you this entry. This entry that is before this intersection will give you tremendous results. So again, This will not work for all stocks. Now if I say this strategy gave us good results, now tomorrow you go and just apply this randomly on any stock and say this strategy does not work, then that is not my fault. Please make sure that you select the appropriate stock. Stock which is in its range bound market will not give you good results. Whatever strategy you apply on the range bound stocks, that will not work. So you have to select the proper stock which is in its rally stage and then apply the strategy, and this will give you a very good results. So let's move forward. So now you got a good entry in this stock, then it's better to avoid this stock for this day. You got one good trade, now you go for some other stocks and search if you can get a good entry, because the chances that if you keep on hanging on to the same stock, the chances that you will make losses after that. So once you get a good trade, just leave that particular stock and go for some other good trendy stocks. So for analysis purpose, just to show you the example, I'll go on further with the stock. So here there is a consolidation. So only when there is movement like this, you find that the stock is trending, only then you can take the trade. Here you can see immediate red green candles are forming, and here actually consolidation is happening. So avoid such times. Here again it started moving actually, you can see. So once this green candle is formed, then again the market started moving up. So this is also another opportunity. Now here you can see the stock is moving in the upward direction, right? So when there is a good upward movement, you can expect some fall. So you have to, in such cases, look for shorting opportunity. Here you can see the stock is moving upward direction, and after some time definitely it will come down. So when such good movements are happening, you can just check if you can get some selling opportunity. So if you go on checking here, see here another big candle is formed which is breaking both of these lines, right? The candle completely, the body of the candle breaks both of these 50 days exponential moving average and 13 days exponential moving average. So now we can look for shorting opportunity. So where will be your entry? Your entry will be just below this candle at this point. Your stop loss will be here, and your target will be based on RR, because 200 days exponential moving average is above. But what happens in this case is, you can see the stop loss is very big, right? Your RR will also not fit in. Usually such when you get such big candles, your entry will not be triggered, so it is better to wait. Now see, you can see the next candle formed is green, so this was not a proper signal. So let's wait. Again this green candle is formed, it breaks both of these lines, but the body is breaking only one line. So again wait. Now you can see a red candle is formed, and as I already told, the stock was moving in the upward direction for a long time. So this can be an indication that now the stock will start moving in the downward direction, and you can also see that it is breaking both of these lines. The body of the candle breaks both of these lines. So your entry can be just below this candle, stop loss can be just above this candle, and your target based on RR, or if you want to trail the stop loss, you can do that also. Let's see what happens next. The next candle is green. So now our entry is triggered because the low of this candle is below the low of this red candle. So the entry is triggered, but it is moving towards the stop loss. So our entry got triggered over here, but a green candle has come now. So it has approached our stop loss. So let's see what happens next. Okay, in the next candle again a red candle is formed. You can see it again broke both of this, but the body of the candle broke just one line. So we don't know, we can just hang on and check what happens. Okay, from here the stock started falling down. You can see here, anyways, RR of 1:2 will be met. So it is always advisable to keep an RR of 1:2 if you are keeping the target based on your RR ratio. You can see the stock fell. Definitely more than 1:2 RR is met over here. Let's see if we have any other entries. if you check this candle, see this candle, body of this candle broke both of these lines, but our entry is here, right, which is not triggered in this next candle. So we have to strictly follow the rules because we don't know what happens next. So if our entry is not triggered in the next candle and that next candle turns out to be green in color in this particular case, then just exit the position, just cancel the order, don't take the trade. Though it moved after that, you can see at this point where there was an intersection, from there again stock started falling down, but it's always better to act on the safer side. So it is better to cancel this order and not take this trade because this is not the proper setup for us to work. Next, you can see here again we got an entry, this green candle, it broke both of these. So you can make an entry just above this candle. The stop loss can be just below this candle, keeping a buffer of 0.20%. And in this case, you can see 200 days moving average is below, right? So we cannot keep this as a target because we are looking for buying opportunity. So you can keep 1:2 ratio RR. So it's always preferable to keep 1:2 RR, but if your 1:1 RR is met, then what you can do is you can exit half quantity, so that to that extent you will be on a safer side. You can book profit with respect to half quantity and then you can hold another half quantity to see if it reaches 1:2 RR. Let's check one more stock. I have taken Tata Motors. If you check over here, you can make out the stock was range bound for the long time, right? More than 1.5 hours. This is 15 minutes candle. So you can see for a long time the stock was range bound. You can see the candles are touching these lines, but they are in the same level for a long time. So this means that the stock which we chose is not proper for that particular day. Our stock selection might have gone wrong. So please work under discipline. Now here you can see this candle, this candle broke both of the lines, but we didn't get the entry. Again, this red candle broke both of them, and later on the stock fell. So it might work sometimes, we don't know, but this is not a proper setup. So please maintain some discipline, and whenever you find such setups, that is the range bound markets or no proper confirmation, then please avoid that stock for that particular day. Don't take chances. Let's check if we have some other opportunities. See, again here it is range bound, so don't trade in such setups. See here again range bound. Actually this stock is under range bound zone. So let's check some other stock. See, now this stock is trending actually, but still our criteria is not met. You can see there is a long gap between these two lines, and even though the candle came nearer, no candle broke both of these lines. Let's check another stock. I have taken Lupin. Okay, see here we have this red candle. The body of this candle broke both these lines, so this is a good opportunity. Now we are just looking for the good opportunity. Now we can see here both of these lines have come nearer, so it might intersect, but we don't know. So at this point we will short, okay, below this candle, and above this candle is a stop loss. Now it can intersect or it might move in the different direction, we don't know, but when it comes closer we predict that next intersection will come and there will be a good fall. So in this case you can see intersection didn't come, but your entry triggered and the stock fell down, giving you a very good profit RR of 1:2. Let's check further. See here there is a very good entry, there is a very good fall, and after that we got this green candle which is breaking both of these lines. So your entry will be above this candle, just keeping a buffer of around 0.2. Stop loss will be below this, and you can see in this case 200 days exponential moving average line is above. So now here again the gap is too long, so you can keep your RR, keep your target based on RR, or you can go on trailing the stop loss. Let's go on checking. You can see here this candle, but if we zoom out and check, actually the candle didn't close, I mean the body of the candle didn't break both of these lines, only wick broke. But say the body of this candle also broke both of the lines, then our entry will be below this candle, stop loss will be above this candle, right? You can see immediately in the next candle our stop loss got triggered. So in such cases, even though your stop loss is triggered, immediately if you get another good confirmation, then you can try for the next one. So you can try for the two trades. Even though one gets hit, immediately if you get a good signal, then you can go for it. In this case, you can check this green candle again give you a confirmation. This green candle gave you a confirmation because the body of this candle clearly broke both of these lines. So your entry can be just above this candle, stop loss can be just below this candle. And in this case, if you see 200 days exponential moving average line is above, right? So you can keep this as a target, or you can keep based on your RR ratio 1:2. If you feel this is too much or the target is too big, then you can go for a target based on your RR also. So here if you check, this 200 days moving average line is also broken. The target is met over here. After that, we didn't get any proper entry, so you have to be very careful. See, in this case, even though the wick crossed both the lines, the body of the candle didn't break, so you're not going to take this trade. You can see this candle broke both of these lines, but you can see that the stock is in the range bound zone for the long time, and this candle is too big to trust, so we are not going to consider this candle. We are just ignoring it. Again, you can see a good entry is triggered over here. It broke both of the lines, so your entry will be above, stop loss will be here below. 200 days exponential moving average is below, so you cannot consider this. You will keep the target based on the RR. You will go on trailing the stop loss candle wise. You can see the stock moved upwards for some time, and of course then again it became range bound, but here itself you got a very good points. Similarly, you have to go on checking. Please do the back test. The homework is you have to take different stocks and do a proper back test of these, and you have to also make sure all the conditions are met. That is, the stock should not be in its range bound zone, and the body of the candle has to break both 13 days exponential moving average and 50 days exponential moving average. Not only for this strategy, it might be any strategy. Stock selection plays an important role. If your stock selection is wrong, no strategy will work. I keep on repeating the same sentence in all of my videos because that is the first basic important thing which most of them don't give importance to. So please make sure that your stock selection process is very strong, and I also have a separate video on that. Do check it out as to how you have to select the stocks. Only when you select the appropriate stock and apply the strategy and a proper setup, most of the strategies do work. So the beginners usually fail in this part, that is the initial part itself, choosing the stock. So please choose the proper stock, apply the strategy and a proper setup. Isn't it very simple? Hope you like this strategy. Please do back test and get some confidence. Once you get the confidence, you can go for live trading, and if you apply it under the proper setup, it will work effectively. I wish you all the best and happy trading.